Well, it's pretty much every company that can. Interest rates are really low right now, so it's a great time to tap the market. And we're seeing, Apollo Global Management was in market with a dividend for Sprouts Farmers Markets, and then there's Bain Capital with Air Medical. So any company that can is really trying to get in.
So these private equity firms have been in the market on behalf of these companies?
Yes,
then?
That's correct.
Okay, so they've been basically borrowing on behalf of these companies, and these companies are using that money to pay out the dividend to their shareholders. Then.
Exactly.
Okay, so tell me, what's the story with Dr. Dre and Beats?
Well, it's a good time to borrow, and if a company needs loans, the rates are cheap. So I think a lot of banks are pitching that idea to companies. So Dre is, probably looking to return capital to shareholders right now, and in the form of a dividend.
Right, to cash in on that.
Exactly.
Is it just low interest rates, or are there other factors involved in this?
Well, there's a lot of demand right now for the loan product. I mean, we've seen $26 billion of inflows into funds that buy loans, and we've seen $36 billion in collateralized loan obligations formed this year. So there's definitely interest, and it's because loans will protect investors against rising interest rates. So that does play a really big factor.
Right, so they want to cash in on the low interest rates, but they also want to protect themselves because one day Ben Bernanke is going to pull the plug on
Exactly.
QE. And what about mergers and acquisitions and leverage buyouts? I mean, they haven't happened to the degree that we've been hearing, right?
That's exactly right. And we've seen, we've seen Heinz and Dell, but that's just not enough of leverage buyout pipeline to absorb all of the money that investors have to put to work in the market and get returns.